Welcome traders to this video from Admiral Markets. We're going to take a look at technical analysis as always, of course, on the euro dollar, pound dollar, dollar yen, and AUDUSD. But first of all, this disclaimer explaining the online material here is developed by Admiral Markets Estonia for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding information on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, the risk disclaimer explaining that trading for exchange and global financial markets is considered very high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. Please pause the video to read the entire disclaimer, and we do thank you for your attention. Before we head over to the charts, this is the lineup for our educational webinars. Tonight, of course, Nenad is going to take a look at weekly Forex recap. We have live trading labs on Tuesday and Thursday and Forex strategy on Wednesday. The Pro Learning Lab, by the way, is on Tuesday, not Thursday this week. Let's start with the euro dollar. I think this is an interesting situation because of the divergence between the oscillator here at the bottom. Let me make that a bit bigger. Clearly a lower or higher low, I should say, and price is making a lower low. In fact, that leading to the conclusion that we might see a bounce here on the euro dollar. So I'm keeping a close eye on this green resistance line, or I should make that maybe red actually, would be making more sense considering the fact that it's resistance. So if we make that red, you can see a break of that line, potentially the signal that the euro dollar could be heading towards higher highs yet again. Now why I'm saying again, because especially the daily chart, of course, despite the fact that we did break out of that uptrend channel, we do have still this support level 135, I would say roughly. This could still be a weekly retracement. We'll have to see if that's true, of course, but for the moment you can see a lot of momentum here. This is slowing down on the daily chart, and the question is, will that be indeed the breakout that we can expect up to 137, and can we then continue to higher ground up to 140? If we take a look at the weekly chart, for instance, we can see there is a bit of a cause to expect some bounce just because of the doji basically giving, of course, a indecision in the market. A doji, no direction, but in this case, after a downside, the doji could be maybe a turning spot for some upside. So that's my main thought at the moment. Hourly, you can see Friday had a pretty big spike up. So let's see, maybe some consolidation here, but today or tomorrow or Wednesday, we could maybe expect some breakout. That's what I'm looking at least that's my analysis showing right here, right now. One line to keep an eye on is this green line actually on the hourly chart. It's connecting the bottoms here. So if that line were to break, then things are not looking as bullish as maybe at the moment it would look like. We do have this downtrend channel on the 4 hours. So if this support line on the hourly were to crack, or maybe even something like this were to break, then we could see potential for downside to continue despite the 4-hour divergence. All right, let's move over to the pound dollar. Pound is looking a bit more bearish at the moment just because of the fact that we also here broke an uptrend channel and don't have really divergence between these bottoms. So that's a bit of a different story, I would say. Small difference, but important difference. If we look at the 1 hour chart, actually, you can see price is trying to break through the support line as we speak already, in fact. So with that in mind, you can see the potential for price maybe to head lower to the 166.50, which is here a support level on the left, or 166.50 is also roughly at that minus 272 target, which is taken from this very first move down. So in that regard, a bit more bearish. If we take this off quickly here and look at the weekly chart, you can see too that last week was a bearish candle as well, not a doji. So the pound dollar looking a bit more bearish, I would say, than the euro dollar. Of course, that's contradictory. Normally they do tend to move in the same direction. So we have to see if which one of the two prevailing trends will win, if dollar weakness or dollar strength. But the euro and pound looking a bit in a different direction at the moment. If we look at the Aussie, this is definitely looking more like dollar strength because of the break of this uptrend channel, in fact, last week. And Friday we had a doji after some rally, in basically showing indecision after this rally to the upside. So we had a break and then we bottomed out here, bounced off support, but that bounce really found heavy resistance with that doji right at those bottoms here. So, and now we're seeing a pretty strong downside already just at the beginning of this week. So if we look at the weekly chart, you can see two very clear bearish candle 2 weeks ago, strong bearish candle, Last week was just actually a retracement candle of the week before. So this is looking like more bearishness in tandem, basically in line with what we saw in the pound dollar. So if we put fibs on this very first down move, we can see if we break through the basically the support level here at 92, we could be heading lower to 91.40 and then maybe 90.50, where we have the targets to the downside here. So that's something very interesting on the daily chart. In the meantime, you can see also, by the way, that this was a hook back to the broken uptrend channel. If we zoom into the 4-hour chart and hourly, you can see that down move a bit better, and we broke roughly here this support line, as you can see, that triangle in fact to the downside. So a hook back to the triangle for more downside. Any retracement would seem at the moment bearishness on the AUDUSD. Dollar yen is quite easy. It's consolidating basically. There's a big range going on already, a couple of months in fact, as you can see this weekly chart. A lot of weekly candles are going sideways. So there's really not much momentum either direction. There's some maybe on lower time frames, as you can see, of course, some ups and downs, but still. 2 weeks ago we had a pin bar, and last week we had a bit of a trace of that pin bar. So looking at that, it would seem a bit more bullishly lined up at the moment for upside up to the resistance to about 103, I would say. There's not a great trade out here. I think the space is quite limited, so the dollar yen is not something that's very interesting to me, at least. So this is of course just my opinion. Take it for how you want to interpret it, but this is just how I view the market at this moment, and of course I'll be adjusting this analysis as we go along throughout the week. So take a look at our webinars to see how those things are developing, and this is just of course for education and informational purposes only. So thank you for joining us today, and see you soon. Cheers.